that right now. All right. I'm pleased to be joined with Rafik Moore of Brait Capital. Um, Rafik, hey, thanks for joining me today. How you doing, sir?
Hi, Brian. Glad to be here. Thank you very much for inviting me to your podcast.
Yeah, awesome. Well, we talked briefly a short time ago about your Midtown Square project in St. Cloud, and we sure want to circle back to that and find out a little bit more about that project in case for the people who didn't get to read the story. But I wonder if you could just start out by telling us a little bit about Brait Capital and sort of what your focuses are. It sounds like you're based right here in Edina, is that right?
That's correct. Yeah. So, Brait Capital is a vertically integrated real estate investment company. We have our own in-house management, construction, and leasing, marketing. The problem we're trying to solve at Brait Capital is to uh, essentially go after big box retail and convert the failing big box retail into flourishing business incubator, light industrial flex uses. With the help of the municipalities, we often work with them to change zoning. And Brait in Old English means diamond in the rough.
Mm.
And our whole thesis is to pick up these diamonds in the rough and polish them into brilliance. So this is a second one of these malls, and we're under contract to buy another one in Cleveland, Ohio. We have come up with this mall redevelopment model after having worked as a light industrial flex investor in the industrial sector, and now everybody and their brother buys industrial, so the prices have gone through the roof. So we are trying to evolve and adapt to new times and pick up these distressed retail assets and convert them into light industrial flex uses. That's what this economy needs, in my humble opinion, is that taking something that nobody wants and converting it into something everybody is going after.
So, can you talk a little bit more about the diamond and the rough aspect, and what are some of the economic forces here that are putting some of these malls in that situation? Just we talked about the impact of COVID and some of the impact that has had on the retail sector, but I wonder if you could explain a little bit about what makes these malls a diamond in the rough, what the opportunities and challenges are.
Well, there's a lot going on here. It's not news to anyone that we as a society are evolving very, very quickly, and it's hard for certain sectors of our economy to keep up with the advances in our technology and e-commerce. I mean, 20 years ago, a meteor called Amazon hit our retail industry and completely decimated it. Big retailers like JCPenney, Sears are struggling or gone. Macy's is struggling multiple locations. Everybody had to adapt. And some of our retailers like Walmart and Target quickly adapted and created their e-commerce sites and went on with their times, but others didn't. And whoever was not in with the program has seen their demise, and it caused tremendous destruction throughout the United States. As a result, you have these very, very large structures all across the nation. In any town, there's multiple of them, and they sit there vacant, struggling. The main thing that we've identified is that these properties are very well located. They're in the center of the cities for the most part, which is great. They are spanning anywhere from 20 to 70 to 100 acres. Their sizes are anywhere from 500,000 to 1 million square feet in some instances. And yet they are turning into ghost towns. Why are they turning into ghost towns? Simply because the price and value has definitely changed. In the past, when you have a retailer on each, excuse me, on each side that drove traffic, anybody on the inside, excuse me, anybody on the inside benefited from the traffic the anchors generated, and they were able to create their own little businesses and benefited from it. When the big anchors, the big retailers left, the traffic has subsided, and then smaller retailers started struggling. And I remember 20 years ago, anything in those malls, a little out kiosk, $10,000 a month. It was really, really highly prized commodity. No more. It's a ghost town now. So you have to reinvent the utility, number one. Number two, you have to reorganize the entire ecosystem. And one of the main things that we work on is affordability. You can't be getting retail rates for those types of assets anymore. So immediately after acquisition, we drop the price from whatever the retail demands to a light industrial rental rates. So that's number one. Number two, we invest tremendous amount of capital back into these units, into these properties. We carve them down in a specific methodical way. We improve them technologically through whether it's cameras, whether it's lighting, whether it's solar. We really try to modernize these old buildings that were built in the 80s and 90s. Another thing that's very, very important to us is raving fan tenant culture. What does that mean? All of these tenants are distressed. They are frustrated. The rent is high. The building is not cared for. There's a roof leak. HVAC doesn't work. And there's a slow exodus. Our job is to stop the exodus, immediately tend to their problems and issues, and preserve whatever is left. It's so much harder to bring back a dead mall. When there's 30, 40, 50% occupancy, we can still retain their ownership and change the utility, because they will help us with the operating costs and other expenses. I mean, these things are so expensive to operate. You got a 500,000 square foot facility at $2. That's $1 million a year a month, a year, in $80,000 a month in operating expenses alone. For me to get in there and it's vacant, it's extremely difficult. So many times we need the help from municipalities to help us with zoning changes, with tax deferment strategy, with many things. So what we are doing at Brait Capital currently is developing a framework and a process and a platform to deal with these problems, and hoping that municipalities, lenders, investors will see what we see and help us to pick up these diamonds in a rough and polish them back into brilliance.
Yeah, so tell us a little more about Midtown Square, and where are you at with that project, and what are some of the elements you're looking at there?
Midtown, we purchased 2 weeks ago, 3 weeks ago now, and our strategy is exactly that: is to really go to each individual tenant, understand what their problems are, and tend to their issues. We bought it with 50% vacancy, and the prior owners try to do something with it, but I think their strategy was different from ours. We want to we're going to be cutting some drive-in bays. We're going to we're contemplating putting a mini storage facility in one of the quadrants in the back. We are contemplating putting a co-working space in one of these units over there to really bring back some of the entrepreneurs. The conventional parts of that building are office. We have office, multi-story, 4-story office in there. We have retailers in the front, and our office tenants, conventional office spaces don't work anymore. So what we want to do is create a co-working model. There's a lot of people who work from home because of the Zoom culture and what happened after COVID. But for a $300, $500 a month, we can give them a subscription to come and be at the office whenever they want to. But then if they feel like working from home, they can work from home. And so these traveling employees can have the haven and get away from from their cats and dogs and their kids in these things. And it doesn't cost them an arm and a leg. And they don't have to commit for 5 years. They come in, they do the work. And I think that's a new economy in the office sector, is to provide that flexibility and subscription model, and give them the printer, and give them the Wi-Fi, give them the coffee, but to have them occupy their little office where they can do their business and not be confined to a 5-year lease.
And what kind of conversations are you having with prospective tenants there? What has the reaction been so far to this model and what you're putting together in St. Cloud?
Our biggest thing is to really communicate to the community and ask what the demand is. We are not in the position to reutilize this building to our liking. We are merely servants and stewards of this property. And so we are working with Chamber of Commerce, we're working with the local entrepreneurial community to really understand the needs and to serve the need. Some people wanted to open a charter school. We're contemplating a charter school evolution of parts of it. WeWork space kind of came up in a conversation, co-working space. So we're reusing second floor dead office space into a co-working type opportunity.
Mhm.
We're talking to a bunch of retailers about bringing back, but in order for the retailers to come back, we need to find a way to activate the space. So one of the things we're doing is bringing a restaurateur who can take the restaurant on the first floor and put a banquet hall facility in there, and maybe they will do some events, event spaces.
Mhm.
We worked with a bunch of axe throwing people, businesses, or we in some other communities we do gyms. We put in a nice kickboxing gym, or we would love to put some kind of a swimming school. But again, it is not up to us what this building is. It's up to the community, and we're basically patiently waiting and offering all this marketing and really inviting everybody to participate in the evolution of this product. And we have certain amount of capital reserved for the reinventing of this property. So this adaptive reuse was pretty intensive, and we're working with architects and the municipalities and our bankers to really understand what needs to happen and plan accordingly.
And remind us again, where is the facility located specifically, and how big is it square footage wise?
This particular property is located at 3333 West Division Street. Very well trafficked road. It's on the second or one of the highest trafficked intersections in St. Cloud, if not the highest. And it's a 10-acre parcel with the property size to the tune of 225,000 square feet. It does have a new Dunkin' Donuts on the corner that comes with it, and the building has a lot of vacancy, a lot of deferred maintenance, of which we're attending to at the moment. We're talking to 4 or 5 tenants. I don't recall exact amount of tenants, but we're essentially working with every current tenant, trying to understand their needs and tend to them.
Has the city been good to work with?
We're very pleasantly surprised to have worked for the first time with the city of St. Cloud. We love the city. I think they're really good partners in this evolution. We've met with economic development chair and the planning building official, and they said, whatever you guys need, we'll be happy to help you. If you need some variances or whatever, they were very, very pleasant and embraced our company and our people with open arms.
And you said you're looking at some pretty significant investments. What is the timeline for that and for having it ready for occupancy?
So many of the units are ready for occupancy, but they require a certain amount of capital infusion. So essentially, it's a continuous improvement process. I'm hopeful that we will be fully stabilized with this property within 24 to 36 months. That's our goal. However, it's all a work in progress.
Okay. What else do you have going on?
What else do we have going on?
Briefly.
Yeah, sorry, these guys are very loud.
Okay.
What else? We are working on a restaurant. We're working on a charter school. We're working at some retailers. We're talking to some barbers. I think there'll be a lot of different users that will come in. Obviously, our goal with this podcast and in communicating to the parties involved is that we're open for business, and we're hoping to hear from you, the tenants, potential tenants, and see what kind of ideas you have. I mean, do we put a trampoline park? Do we put a gym? I mean, we need to find entrepreneurs who are interested in opening businesses inside that building, and we'd love to provide capital and space and accommodate whatever needs they have.
Awesome. And can you tell us just a little bit more about yourself and how you got into the development business?
Brait Capital is a fairly new business. Before Brait Capital, I started a Caspian Group, which was about six
Hmm.
years ago. And Caspian Group is a real estate brokerage management company. I've always thought of ourselves as a management company, but I've never, or a brokerage, but I've never actually done brokerage myself. I hired brokers to do the work, and I realized about 2 years ago that while I call myself a broker, I never do brokerage, so it's not very a good way to brand and market ourselves. So that's where the Brait Capital idea came about. And also, having never done any ground up developments, having never built anything from scratch, I realized that ultimately we are in a diamond and rough business. We're diamond miners, and these diamonds in rough, they are distressed, and so our the whole thesis of our investment companies to work with distressed assets, and we are in 8 states at the moment. We've done a lot of work in Minneapolis and Twin Cities, and then we went to this is our second or third asset in St. Cloud.
Hmm.
We have a lot of going on in Chicago and Milwaukee, in Ohio. We have projects in Cleveland, Ohio right now, and Dayton, Ohio. We have projects in Jacksonville, Florida, and Dallas, Texas. And
Hmm.
essentially, we go with where the opportunity is. Opportunity sort of finds us, and when we feel like we can impact the community and improve the asset, we sort of sign up with a job and go with it. So uh, I think where we stand today, we are slowly evolving from a regular industrial real estate developer into a mall redevelopment company, and mainly because attacking these larger projects, they're so complex. There's so much going on there, and you need somebody with the comprehensive methodology. We feel like a local. It's really hard for a small local investor to do everything on their own, because there's marketing, there's construction management, there's capital raise. I mean, these things are pretty complex ecosystems. So I'm yet to find somebody who is doing the same thing we're doing. And I believe that in the next 5 to 10 years, we are going to raise a fund and really go through Midwest and maybe beyond to solve this problem that America is facing. And we're going to rebuild each one of these communities by investing capital and helping these entrepreneurs to with the space needs.
Hmm. Well, it sounds like you're onto something there, Rafik. And I think when we talked last time, you mentioned that the dinosaurs are dying, and that's what you're sounds like you're looking at addressing that situation and
I,
revitalizing some of
I would
these.
like to rephrase the thing. Dying is a very morbid and scary statement. I'd like to say that the dinosaurs, which these buildings are big dinosaurs, they are really on their last leg, and our
Hmm.
job is to help them evolve and adapt to the new
Hmm.
environment. And so maybe we don't call them dinosaurs, maybe we call them something else, but because dinosaurs obviously never recovered and they died.
Hmm.
So maybe it was not a great analogy, but I'll tell you one thing. We are very, very positive, and this is our third project now in this ecosystem with the malls. We're very, very confident that provided we are a price leader, we provide best pricing, and because our basis is so low compared to all other real estate, we can provide affordable house pricing. Number one. Number two, because of our commitment to raving fan tenant culture, because of our commitment to technology and efficiency, and really making these places operate at a lower price per foot because of the efficiencies, because of the solar and LED lighting and all kinds of improvements.
Hmm.
We believe that we will be a really good value proposition. When we get into these towns, we become a center of gravity for any kind of real estate need, because it's hard for our competitors to compete with the pricing. We can slash our prices by half and still deliver value to our tenants but also improve their spaces. You know, we got this raw space and we have capital from our banks, and we got to do something with the capital and with the space. So we invest on behalf of our tenants into their space, and it becomes essentially a newer product at a discount price, discounted rental rate. I believe that we will be successful in the long run, and in the meantime, we'll impact and influence these communities in a great way.
Well, before I let you go, I was wondering if I could get your thoughts on just kind of your outlook for the coming year in terms of real estate development, sales. We all know what's been going on with interest rates. We keep hearing that maybe they'll be coming down again. But what are your thoughts about the coming year? And you see things picking up, or?
I wish I had a crystal ball and knew what will happen with the. I mean, we all hope and pray that the rates will come down, and it's been really tough. Obviously, there's greater forces at hand to deal with, inflation and we're mere servants trying to keep up and survive. But I'll tell you one thing: I'm very optimistic because I believe that if the rates will come down, we'll have a ton of activity. One thing that I can tell you about our business, because we buy these properties at such deep discounts, because these properties need a lot of investment, we generally are not affected by the interest rates as much as the other guy, because we buy these properties sometimes at $8 to $10 per square foot, and they're losing. Day one, they're losing 30, 40 grand a month in cash flow. So we have to hurry up, mobilize, and really solve the problem day one. But our commitment on these projects is to turn them around in short order, and that's why you'll see that our marketing is pretty spot on. But from the standpoint of interest rates, I guess what I'm trying to say is they have impact on the broader market, but they don't really affect us. We can cash flow stabilize property like this at 10, 12%, no problem, because we have enough cash flow to sustain it, provided we bring the community back. And that's where the challenge is. It's hard to go into this community, and everybody knows this mall to be a sort of a languishing mall with roof leaks and not working HVAC, and to help to change the perception has been our biggest challenge. And so we are going to create a tremendous branding and marketing and show videos and pictures of our prior work and say, look, what you see today is not what's going to be there in about a year. We just need some time to really invest in this community. So
yeah, great. Well, great. Well, good luck with your project there, Rafik. It's been great talking to you, and hope we can stay in touch.
Thank you, Brian. It was great talking to you. Thank you for the invitation, and I wish you the best.
Thank you. Have a good day.